Okay, dear children, now we will continue with the new chapter called Bank Reconciliation Statement. Okay, so what is this and why we need to prepare this? So, before we continue our discussion, I want to tell you that when we prepare cash book, we record the bank transactions as well. Okay, in case of double column and triple column cash book, isn't it? We have the bank column. Okay, now banks, they also give us a statement of our transactions, and that is called simply bank statement, or in general terms it is called passbook. Okay, you must have seen the passbook of your parent. Okay, you must have heard मलाई यो के अरे पासबुक अपडेट गर्नु छ, so they go to the ATM machine. I mean the passbook update machine. Okay, it's nearby your ATMs only, and sometimes they visit the bank just to update their passbook. So similarly, the companies, okay, the firms, or you can say the business organizations, they also have their bank account, okay, with their respective banks like HDFC, Axis Bank, SBI, okay, ICICI Bank. So they have their bank account, and they also get the passbook for the same. Okay, and they record the transactions in the cash book. Okay, now there may be some kind of differences, okay, at the end of month, or when they want to check uh, their cash book and the passbook. Okay, when they want to match these two books together, there may be some kind of discrepancies out there. Okay, there may be some kind of differences, and to reconcile that difference, okay, just to make sure why these um, differences are coming, okay, so they prepare a statement known as bank reconciliation statement, just to establish the inference between the differences in the balance of cash book as well as the passbook. Okay, just to uh, rationalize it, okay, to justify the difference, okay, to draw a relationship between the differences of cash book and the passbook, they prepare a statement known as bank reconciliation statement. Okay, I hope you understood the term of bank reconciliation statement. Okay, why we prepare this, okay, why we have to prepare. Okay, the definition is given out here. Okay, you can also find in the book, but you must understand the definition. Okay, it's written out here. Bank reconciliation statement is a statement prepared to reconcile the differences between the balances as per the bank column of cash book and passbook on any given date. So on a given date, if you want to check your cash book and the passbook, okay, if you want to match together on a given date, there may be difference. Okay, if there is no difference, okay, fine, no issue. But in case of any difference, you need to reconcile the difference between the passbook and the cash book. And why we need to reconcile it? We need to reconcile, we need to draw an inference. Okay, by inference I'm actually referring to the relationship. Okay, you draw out the relationship between the differences of the cash book and the passbook. You must explain why there is a difference. Okay, because as an accountant you will prepare various books of accounts, that is regarding the financial transactions of a particular or organization. And when the auditor will audit the books of accounts at the end of a year, okay, that time there may be some kind of problem, okay, if the differences are different. I mean the balances are different, and you have not drawn any kind of statement, okay, you have not issued any kind of statement explaining why there is difference between the cash book and the passbook, then the organization must pay some amount of penalty, okay. That is why, to make sure that the work of audit is to be minimized, now what they do is, I mean, normally the organizations, what they do is they check their books of accounts quarterly, okay, after every 3 months, or in some cases in every 6 months, that is half yearly, okay. But annually they have to submit their report to the auditor, okay. And the process of auditing uh, can be internal as well as external, okay. Now this topic auditing is not in our syllabus. In fact, you don't have to study right now. When you do uh, BCom accounting in third year, you have to study what is auditing, okay. Only in third year, that is the final year, okay. Anyway, so what are the reasons for difference? The reasons for difference are, okay, so I have written only 9 differences, okay. So let us just discuss these 9 points of difference one by one. Number one, checks issued by the firm but not yet presented for payment. So whenever you issue a check, okay, to your suppliers or maybe to your creditors, when you're making the payment through check, you immediately record in the cash book, okay, that is recorded in the cash book. But the other party, I mean your creditor or supplier, they may not uh, send their checks immediately for the payment, okay. They may keep it for at least 5 days or maybe 10 days, okay. But in between, you are matching the cash book and the passbook, and you will observe the difference. In cash book you have written towards the credit side as payment, but the same has not been presented for payment. That is, from your cash book, the bank balance is getting decreased when you make the payment. Obviously, the bank, it goes out. I mean, the cash goes out of bank. So bank balance, it must decrease. But in reality, the bank balance has not been decreased. Why? Because the person to whom you issued the check has not presented for payment. So at that point of time, there may be difference between the cash book and the passbook, okay. Now again, same thing, checks deposited into bank but not yet collected or credited. So whenever you deposit check into bank for collection, okay, the same day it may not be collected, okay, or maybe it will take 2-3 days, and in between, if you are matching your passbook and the cash book, then you will find the difference. Because whenever you deposit check in the bank, you record towards the debit side in the cash book. For example, if Amrit, let us suppose, if Amrit has given you a check, okay, and you deposit it in the bank on the same day, so you will write towards the debit side to Amrit account, and you will record the balance in the bank column, okay. But the same may not be collected or credited on the same day, or maybe it may take okay, 3 4 days to get collected or credited. So why it happens? Actually, when you deposit a check in your bank, so from bank it goes to a clearing house. Okay, it's a place where the checks of all the banks it goes out there. Okay, so in the clearing house, the checks they get cleared, and then again the check will uh, I mean the information will be given to the bank. Okay, and ultimately your money will be credited. So it may take some time. Okay, and this duration will be longer if the banks are not the are not of the same uh, branch, or maybe if they are if the banks are not same. Okay, if they are not the home branch uh, or home bank, you can say. For example, you have bank account with SBI, but Amrit he gave you a check of Axis Bank. So Axis Bank is a different bank, and the SBI is a different bank. So it will, I mean, the information first it will go to RBI first. Okay, its headquarter. I mean, the original branch is in Kolkata for West Bengal, and for Sikkim you have in Gangtok. So it takes time to get cleared from the clearinghouse, at least 7 days. So there may be a case of difference. Now, point number three, amount directly deposited in the bank account. So what happens is that sometimes the debtor, okay, without uh, prior information, okay, without informing you, may deposit the money into your bank account, and you have no information regarding that. So in cash book, you will not record the same, but the money has been already deposited in the bank account. So in that case, there may be a difference in the passbook and cash book. Okay. Point number four, bank charges. By bank charges, we normally mean the money will be debited from your bank account. Okay. Uh, let's say for this account maintenance. Okay. And for the service of ATM, okay, they may uh, charge some amount of annual fee from your account. Okay, the money will be decreased from your account. So the same may not be recorded in the cash book. So in that case, you may find a difference between the passbook and cash book. Okay. Now, point number five, interest and dividend received by the bank. So if you have received interest on your account from the bank, it may not be recorded in cash book. Okay? The accountant may not record the same, or he may forget to record in the cash book. So in that case, you will find a difference between cash book and passbook. Okay, and sometimes, not sometimes, but all the time, this dividends are actually received by the bank only. And by dividend, we actually refer to the returns on your investment. Okay, if you have invested in stock market and you are receiving in the return or dividend, then you may forget to record the same in cash book. So there will be a difference between the passbook and cash book. Okay. Now, point number six, direct payment made by the bank on behalf of customers. So I think in commerce book, you must have read the functions of commercial bank. Okay, there are two functions of commercial bank. One is the primary function, and the other one is the secondary function. So this falls under the category of secondary function, and this is known as the agency function. Okay, if you are a busy person, okay, uh, and you forget to uh, pay your electricity bills, okay, your phone bills, your uh, EMI or installment payment, or maybe your the charges for Wi-Fi connection, etc. So if you are a busy person, then you will tell the bank, okay, you will instruct the bank that the payments should be paid on your behalf on a particular date. Okay, like I pay the EMI of my scooter on 7th of every month. So that is the instruction given by me to my bank, that you must pay the EMI on 7th of every month. Okay, so bank will make the payment on a particular date, okay, on the given date, but the same may not be recorded in cash book. You may tend to forget few things, isn't it? So if you are not recording the same in cash book, then there will be the difference between cash book and passbook. Okay, now point number 7, dishonor of checks or a bill discounted. So by dishonor of check, we simply mean the bouncing of check. You must have heard your check has been bounced. Okay, um, some of you must have heard uh, this term. Okay, bouncing of check bounce bhayo. Okay, they say like this, isn't it? So whenever the checks are dishonored, actually we are referring to the term bouncing of check. So bouncing of a check is actually a kind of a jargon, okay, but dishonor of check is a technical term. Okay, so if the checks they get bounced or they get dishonored, the same must be recorded in the cash book as well. So in that case, there should be the difference between the cash book and passbook. And sometimes the bills are discounted with the bank. So when the bills are discounted, at that point of time also, uh, there may be the difference in the cash book and passbook. Okay, so what is bill discounting? We will study later, okay, in a separate chapter called bills of exchange. Okay, there are two types of bills, that is, one is bills receivable and the other one is the bills payable. Okay, so we will see how promissory note is issued and how the bills are being paid on a particular date, that is the maturity date. Okay, and what are the procedures for the discounting of bill, we will discuss in the later chapter. But you just need to remember for this BRS chapter that uh, in case of dishonor of checks or the bill discounted, there may be the differences. Okay, now point number 8, errors committed in recording transactions by the firm. Sometimes the accountant may make mistake while recording the transactions. Okay, so at that point of time, there will be the difference in cash book and passbook. For example, if actually the payment made by the bank was 1200, okay, but in the cash book you wrote only 120, so there is a difference of 1080 rupees. So this is the difference that you can observe because of the wrong entry in the cash book. Okay, and similarly that error can be committed by the bank also. Okay, so in that case, there will be the difference between cash book and passbook. You must have heard in the news that in Bihar, in many bank accounts, lakhs and crores of money got deposited. Okay, so people they withdrew money, whatever they could, before the bank it traced the mistake. Okay, so the police investigation is still going on. I don't know how long it will take. There may be some kind of political parties also involved, uh, or maybe some kind of it's an error. Okay, so these are the 9 reasons for the differences of cashbook and passbook. Okay, now let us, yeah, this is very, very important. You must remember these points. Okay, so what are they? Number one, cashbook debit balance means it is a favorable balance. Okay, and it should be recorded towards the plus side. Okay, let me just show you out here. Yeah, so this is your plus side and this is your minus side. Okay, this is the format of the bank reconciliation statement. So if there is a favorable balance of cash book, it means it is a plus side. Okay, and cash book credit balance, it means unfavorable balance, and it should be recorded towards the minus side. And passbook debit balance means unfavorable balance, that is minus side, and the passbook credit balance means favorable balance plus side. So remember this one. Cash book debit balance is equals to favorable balance and it's recorded in the plus side, whereas passbook credit balance means favorable balance and it will be recorded towards the plus side. Okay, in cash book, debit balance is your favorable balance, whereas in the passbook, credit balance is your favorable balance. Okay, whenever you deposit money in your bank account, it is actually credited. Okay, bank will say that your account has been credited by some amount. For example, if the salary is being deposited on your bank account, then you will receive a message that your account has been credited rupees, say 28,536 rupees. Mm, so whenever you see this kind of message, you will be happy. Why? Because the money is being credited in your bank account. So whenever you deposit money in the bank, what happens is that the balance will be credited actually for passbook. Okay, but in the cash book, what you will write? You will write as a debit balance. So uh, this is actually your mirror entry. Okay, it acts like a mirror out here in the cash book and the passbook. So it acts like a mirror. And in cash book, if the money is recorded towards the credit side, it means in the passbook it should be a debit balance. For example, if you withdraw rupees 5,000 from your bank account, you receive a message. Your account has been debited by rupees 5,000 on this particular date, transaction ID, this and that. Okay. So when you withdraw money from your bank account, you will record the same in credit balance. Okay, so the bank will debit when you pull out the money out of your bank account, and the same is recorded in the cash book as credit item. Okay, and you must remember this thing: when question starts with cash book balance, you get passbook balance as your answer. Okay, and when question starts with passbook balance, you get cash book balance as your answer. Okay, be it favorable balance or unfavorable balance, it doesn't matter. Okay, if your question is starting with cash book balance, then you get answer as passbook balance. Okay, and if your question is starting with passbook balance, then you will get the answer as cash book balance. Okay, let me just show you out here. uh, you can see this is your question. Okay, and this question is starting as a sorry, with cash book balance. So what answer you should get? You should get the passbook balance. Okay, so if question is starting with cash book balance, then you will get answer as passbook balance. Okay, let me just show you another yeah, this one. See, if your question is starting with passbook balance, then your answer will be cash book. Okay, so that positive and negative, it's a different thing. That is the plus side and minus, this minus side. You must remember this. Okay, you must remember this one. Okay, so as you can see out here, this yellow, okay, I have highlighted with this yellow color. Cash book debit balance equals to favorable balance. Passbook credit balance equals to favorable balance. But the unfavorable balance is this: cash book credit and passbook debit. Okay, I hope you understood this small theory video. Now we can start with the numerical questions.